This video is a complete KuCoin futures trading guide. So I'm going to show you how to get set up on the platform. As you can see here, they do also have a smartphone app as well. So you can use this. It has exactly the same layout and everything. It's just obviously a lot smaller on your phone. I'm going to show you how to do it on the platform for now, show you how to get set up with futures, get some money into your account, then how to work out different rates for funding, risk mitigation, how to go ahead and trade, and then a small tutorial at the end for a trading strategy as well, just a very simple one. So first, we have to get set up on KuCoin. If you don't have a KuCoin account yet, I'll leave that link in the description. You can sign up right now and then follow along. If you need a step-by-step guide for beginners, I'll leave that in the description as well, plus the timestamps, so lots of information down there if you need it. Firstly, we need to understand the difference between margin trading and futures trading on KuCoin because they're not the same. If you come up to trade and then click on margin trading, it will take you through to basically a trading screen, which is the normal trading screen. Down in the bottom, you can actually see there's cross margin here and isolated margin. Now, margin trading is not futures trading on KuCoin. It's different, and they're actually different accounts. So futures is a completely different product. Margin trading is when essentially you put, let's say, $1,000 on account, and KuCoin may give you 2,000 or 3,000 to actually trade with. You can open positions that are worth a little bit more than the cash you actually have. That is margin, trading on margin. It's not futures. Right here, you're basically just loaning money from KuCoin with the ability to trade more than you actually have in your account. Futures are a completely different product, and I'll explain why throughout this video. Firstly, though, we need to get some money into our futures trading account because KuCoin separates all of the accounts. So once you have an account set up, you need to come over to the overview right here. I'll just click on this and you can see all the different types of accounts that you can actually load up. So you have a main account. You can see the margin account as well if you want to put some money onto your margin account, or your futures account right here. So all you have to do, obviously, is put some money on your account there. I go through that in the beginner's guide if you need to know how to do that. That video is linked in the description. I'll come over to transfer though, and you can see you can just transfer it from your main account into your futures account, US dollars. I have some on my main account, so you can just transfer in some, press confirm. That's an internal transfer, so there's no fees for that, and that will just go into your futures trading account. The reason they're split up is for risk mitigation, basically. KuCoin have a lite trading platform for futures if you just want to get something done quick, and I'll show you how to use that now before I show you the pro platform. If you come to derivatives, you can see futures lite right here. I'm just going to click on this. This trades futures, but it's not a professional setup. Essentially, you basically can go long or short very quickly if you need to get something done and you just kind of want to place bets on where the next candle will be, or you want to kind of scalp. You can actually just get orders done very quickly with this. So up on the top right hand corner, you have your assets. I transferred $100 into this for the video. And then down here, you just can very simply place an order. So let's say I want to put $100 on, I can click 100, but then you can add another 10 to this. You can do that. And then obviously add 500 and it goes on forever. So what you can see here is 5x leverage that I've got. Obviously you can turn this up. I wouldn't recommend using too much leverage. If you're a beginner, definitely don't use too much leverage. Just maybe try on kind of 1x, before you get a bit more comfortable with it. But this very simply, this lite platform just lets you bet long or short on the price over the short term. It's not for professionals really, but if you just want to take a quick bet. So let's say, I went with $40 right here, and I would go 5x leverage, as you can see. So I'm going to do 5x, click long, and then you just really quickly put an order in here. So you can see the leverage is 5x. The execution price, basically just a market order. So you're going to very quickly go through and go long. And the principal is $40 right there. So I'm just going to click off. But if you went through with that, essentially you'd go down to my earnings right here. And then your profit and loss or your P&L would be in here for you, so you can see if you're in profit and loss. This is really a kind of beginner's platform just to quickly go long or short if you want to, kind of trade short term and scalp. Obviously, if you've got a wider portfolio and you're looking to hedge your portfolio or do some more professional stuff, then we need to get into the professional platform. Coming to the professional trading platform then, I'm going to first go through some really important things you need to know about trading futures, and that is how you fund your positions. So we're going to go over to derivatives and then futures classic. That's basically what they call the professional trading system right here. So I'll go through all of this in a second. I want to come up to some important things though. So we can look at the contract specification. So when you trade futures, you're actually not buying and holding any cryptocurrency really. You're just kind of, you're trading synthetic contracts for the difference in price between when you go long and then when you close your position, or when you go short and close your position. But you can fund those contracts in different ways. There's actually two ways. You can either fund them with USDT-M, which is US dollar tether margined, or coin margined. USDT margined is essentially, US dollar margined, and then coin margined is when you can use Bitcoin, Ethereum, I think Polkadot on XRP for right now. So if you click on assets here, just look at the assets you can fund, go over to coin margined right here, and you can see Bitcoin, ETH, DOT, and XRP. These are 4 assets that are supported at the moment anyway, that you can use to fund your positions. So, the amount of funding that you have an account obviously lets you trade and leverage off of that. How much you have on account is going to be how much you can leverage. So it's really important to understand most people will trade US dollar margined because the US dollar doesn't fluctuate in price like a risk asset does. So, if you're using Bitcoin to margin your long, and Bitcoin is falling in price, then it's like double trouble because you've got Bitcoin going down the price that you're long in, and also your collateral is going down in value as well. So potentially way more risky. Most people use US dollar margined. But that's the 2 ways you can basically margin up your futures bets. Now I need to go through what the funding rate is. If you're trading futures, you have to either pay or get paid a funding rate. This is very different to the spot market. You don't have a funding rate in the spot market. So this is the futures trading screen right here. You can see on the left, I've got the Bitcoin perpetual. That means the future has no expiry. So, it just goes on forever. And you can see either USDT margined or coin margined right here. We'll just stick on the US dollar tether margin futures, and you can see all the different type of coins that they support. So you can trade all of these coins in the futures market. So what we really need to understand is the funding rate, and you can see that here. So this is the predicted funding rate, which is plus 0.01%. So in the futures world, all of the contracts that you trade are, done on margin with a borrowing. And so when you're long, you usually have to pay to go long against a short. So for every long in the futures market, there is of course a short, right? If you go long, someone else has to go short. And if they go short, obviously someone's long to, kind of mix up, right? So the funding rate is something that gets paid usually every 8 hours or so. On KuCoin, it's every 8 hours. What you have to know really is that if the funding rate is positive, as it is here, you can see this plus, this means that long positions, all long positions, pay short positions at the next funding. You can see the next funding settlement on the right-hand side is actually in about 30 minutes time. It happens every 8 hours on KuCoin, so there's 3 funding settlements per day. It's a plus 0.01, so what that means is that in 30 minutes, longs, so if you had a long position in the futures market, you would be paying 0.01% as a funding rate to shorts. Now, if this funding rate is negative, it means that short sellers will be paying longs at this funding settlement. It's usually positive. Longs usually pay shorts, but not all of the time. It's something to consider because, we'll just do the calculation right here. So obviously the funding rate is 0.01%. So that's it as a decimal. Now this happens 3 times a day. So we take this 3 times and then we times that by 365. And that is an annual rate of interest that you'll be paying, so around about 11%. So if you're going long in the futures market and the funding is always positive, so you're basically paying 11% in interest to short sellers to place these bets. So just take that into account when you're doing your profit and loss, especially if you have positions open for a very long time, or if you're borrowing a ton of money, then the funding rate does eat into your profits if you're going long and paying this funding all the time. So just put that into your calculations that you're basically paying 11% as an APY, more or less, if you're going long, and if you're borrowing money, that can definitely eat into your collateral that you have on account. The next thing that's very different in the futures market is the different prices you get. You get a mark price and an index price. This doesn't happen in the spot market. So as you can see up on the right-hand side here, you have the price, the actual price that people are trading at on KuCoin. So this is Bitcoin at 40,340. You have a mark price and an index price. The index price, as you can see here, is a composite index of the spot market. What every futures trading exchange will do is will take the price of Bitcoin on various different exchanges, like, the top exchanges like Binance and FTX, and they will come up with an index price of what the average price of Bitcoin is between exchanges. The mark price, though, is the price that is very important for the contracts on KuCoin. So when you're trading futures, you're not trading the spot market, you're trading a contract on KuCoin, and that is slightly different to the index price. You can see they definitely are not the same, right? They're very, very slightly different. Now, the mark price is what KuCoin use to execute all of the contracts on the system. This only really matters if you have a long position that's going to get liquidated, or a short position. If a position is going to get liquidated, then KuCoin will use the mark price as the official settlement price for what's going on. So if there's a dump in the market and you get liquidated, they will take this mark price as the official price that all contracts are executed at. And so this is really important. You can see here that it's very, very similar, but it is different. So just to know that the mark price is something you need to look at. That's where all of the liquidations and all the important kind of contract settlements will occur. At this point, I'm going to take you through putting an order in on the futures screen. Again, this is different to the spot market. So at this point, if you definitely need some more help with the basics of technical analysis, reading charts, using charts as well in a more professional way. If you don't know what the order book is and everything like that, then what I'm going to do is link the KuCoin beginner's guide in the description. You can go and watch that. Also, I have a crypto investment course with, I think, about 50 videos on day trading, technical analysis, how to trade, how to think about trading. Definitely, if you want to, kind of move up a level and get a little bit more professional, or at least kind of know what you're doing, then the crypto course goes through all of that. And then there are private Discord groups that I'm in. You can ask me questions as well. So I'll leave the trading course in the description as well if you want to go through that and learn a bit more. For now, I'm just going to very simply go through placing an order and then a very simple trading strategy that I think is very simple for beginners to kind of get into. That is a support and resistance strategy. Now you can see here I've actually drawn a couple of yellow lines right here. This is support at the bottom and resistance at the top. It's just kind of two levels that I've seen based on what the chart is telling me. On the left hand side, you can click this button right here. This is a trend line, and then just click to draw this on. Now obviously I've got these lines on here already. Where would I draw these? Well, you can definitely see it kind of stands out, right? There's an area where the price kind of hits support and bounces off a few times. So that's a support level. And right here, I can definitely see a resistance level where the price is kind of getting around and being a bit sticky at. So that's why I put these two lines on, and then I'm going to use those as a very simple strategy. What I'm going to get onto now, though, is putting an order in and all the different ways you can do that with futures trading. So on the right-hand side, this is where we put in our orders on KuCoin. So I'm just going to zoom in here so you can see. So the first thing is we can just press this button right here, and that gives us the last traded price. And you can see this is the Bitcoin price right here, 40,309. If you keep clicking last, then obviously it's going to go to that amount. And the amount of Bitcoin that you want to trade, obviously if this is Ethereum or something, it will be different. But you can see I've got $100 on account down here, just as for the video. Then what I can do is basically just say I want to press 25% of that. Now what you can see, I pressed 25% of 100, so obviously $25, but it's come up here with $120. Why is that? Well, I'm actually using leverage. So you can see I've got 5x leverage on here. If you're a beginner, please don't trade with leverage. Just go down to 1x or something, just to try it out. Obviously, the more advanced you get, you might want to use leverage. Leverage is very dangerous if you use a lot of it. So I wouldn't recommend using too much, but you know, we're all can do what we want. But the amount that you trade, you can put this in BTC, or you can go to the trading unit right here. I'm just going to click this and you can change it to lots. So a lot, as you can see here, is 0.001 BTC. So instead of having to type in 0.001, you can just type in 1, and then it obviously gets rid of the decimals. So whatever way you want to do it, I'm just going to keep it on BTC right now. So we can either do 25 or 50%, 75% of what you've got in account, or you can just go in here and manually set that in. In terms of leverage, like I said, beginners, please don't use too much leverage. You can get wiped out basically, right? So, if you have a 10 or 20, let's say a 10% move in Bitcoin, but you're 10x leverage, obviously that's, pretty crazy in terms of how much, your initial capital can get wiped out. So I would not recommend anything more than kind of 5, 6x leverage, 10x leverage, like at an absolute max. But everyone is obviously, on their own choices with that one. Now what we need to do is put in take profits and stop losses, a TPSL, as you can see right here. Now, if you can't see this on your trading screen, it doesn't come up automatically. So what you have to do is come up to the top left and click these settings right here, and then go to, I think it's features, and you can see some of these will be turned off. I have them all turned on. So you should be able to see all of them are kind of green. So some of the pro features you need to turn on, and I would recommend that so that you can come down here and put a take profit and stop loss in. What are they? Well, a take profit is obviously a price where you want to sell and get out at a profit. Now that's different if you're going long or short. Obviously going long, it means you want to buy at a price, say 40,000, and then sell above that. So let's say the price is 40,360. I want to take profit at 42,000. And you can see it works out my profit rate at 21%. So if I get in at 40,361 and get out at 42, my profit rate is 21%. But you can also, click these buttons and it will auto fill that take profit level for you. What you can also do is obviously look and actually find a level. I would say if you went long here, you'd kind of take profits at potentially 43, something like that. So 43,000, right? So that'd be a 33%. Now a stop loss is the complete opposite. If you're going long, it's a level underneath your trade where you kind of sell out your position and you take a loss. This is to stop any further losses. So when you're trading on leverage, as you can see here, it can very quickly kind of wipe out your account, right? If you're on 5x leverage and you drop 20%, basically, everything's out, right? Like your initial balance is gone. So obviously people put in a stop loss when they trade on leverage to try and mitigate some of the downside risk and kind of cut their losses very early before it gets really out of hand. You don't have to use a stop loss, but a lot of people do. You can see you can just put 5% in here, 15%, or find a level on the chart and then put it in manually. Also, you can have this drop down box right here. Hidden means that when you put your order in, it won't be shown on the screen, so other people can't see it. Doesn't really matter. I wouldn't recommend using it. It really doesn't matter unless you're trading very, very large amounts. Post only and IOC. IOC is immediate or cancel. It means that when you put an order in and you have your limit price right here, it either trades immediately or just gets completely cancelled. Post only is something that you can use when you want to get maker or taker trading fees. So on most trading platforms, and KuCoin is the same, if you are a maker of liquidity, you actually get charged a little smaller amount for your trading fees rather than if you're a taker of liquidity. So the way that you would be a maker of liquidity is if you, let's say you're a buyer, you actually put your order on the book a little bit below so that it doesn't trade straight away. And then you hope that someone else comes and hits your order a little bit after the fact. You are there for a maker and he takes your order and therefore is a taker. Makers pay slightly lower trading fees. Post only basically prevents you from paying those taker fees, where if the order can be done straight away, it will actually just cancel the order. So it just makes sure that you never take anyone else's orders and you don't become a taker. Again, not massively important in my opinion. So basically that is it for putting in orders. You just get all of your levels set And if you want to put take profit and stop losses in, you can do that, but you don't need to. Then you just go buy long or sell short, whatever you want to do. And your order will come down here to the left-hand side, and it will show you your running P&L. It will show you, your profit and loss or anything like that, take profit and stop loss levels and everything. You can see all of your trade details right here. And if you want to cancel it, that will just be on the right-hand side. You can just cancel all the order and it will basically trade out for you. Now, there's a few different ways you can also trade out of your order. So the first one is, when you trade, basically you've got an open futures position and you don't actually own any crypto. So let's say you go long and you buy to go long $1,000 worth. What you can do is actually reduce your order a little bit and not sell out the whole thing. What you can do is essentially sell short and reduce the amount that your order is, right? So if you sell short 500, what you do is basically just net off part of your order, right? So you had 1,000 long, now you go short 500, so you're a net long 500. But what you can do is actually press this reduce only. You can see reduce only order will only reduce your position, does not require margin to be frozen. If the order would increase your position, it's amended down or cancelled, right? So what you can do is when going long, if you say, I really don't want to, add to my risk position, you can just press this, and then that order will only be able to be reduced and not added to. Or you can just sell short and kind of, remove some of that order. So your net position is whatever you want it to be. So that is putting an order in on KuCoin with all of the different options. Now I'm going to quickly show you a way to think about risk mitigation when you're putting orders in and trying to get some levels just very simply with this trading strategy right here. Obviously there's a lot I can't go through in this video. So if you want to know more about thinking about how to read the market and everything, I would recommend the course, or at least join the public Discord groups. There's a trading group in there. I'll leave that as a pinned comment. But what we want to do is find out how much risk we are taking and if that's okay for this trade. So the first thing we can do is come up to the top right and basically put in some details and see how much potential return we've got. So what you can see with this trading strategy, it's just a really simple support and resistance strategy. So down here, I've drawn this line because you can see the price actually hits this line a few times, as you can see, and bounces off. This would be known as support. And then this resistance line here I've drawn because previous support turns into resistance. You can see a couple of times where the price kind of trades around here for a little while, kind of met resistance here as well, met resistance here. So we're now up at the resistance line. So we can actually figure out kind of how much we would make if we would go long here, expecting to break through this resistance and possibly return up to this level at, let's say, 43. So you can use the calculator. So I've got the profits calculator here. So let's say I'm buying long and I'm using 5 times leverage. My entry price, let's call it 40,000. And the close price, let's say 42,000. And I want to trade 0.1 Bitcoin, start calculation. You can see my cost is $800. My profit's $200. My return is 25%. So that would be, a decent ratio for me, I would say, for 5x leverage. Now, if I turned it down to like 2x leverage, you can see the profit, goes to 10% ROE, essentially because you're not leveraging as much, you're not borrowing as much, your position is smaller, and so that percentage as a percentage profit on your initial obviously goes down a little bit. But you can see the close price or the liquidation price. You can go through and play with these. Liquidation price, for example, if you go with 5x leverage, your entry price is 40. And then actually the trade moves against you, so it starts going down. Let's say you trade 0.1 BTC, your liquidation price would be 32,200. At that point, if the price got down there, basically KuCoin would liquidate your position and you'd be out. So good to know this before you actually get into some trades. Now I want to show you a very quick calculation of how much to risk per trade. A lot of pro traders will suggest not ever risking more than 2% of your portfolio per trade. And you can use this as a position size calculator to tell you how much to trade. So what I want to do here, and let's say I have a long bias here. So I've traded my support and resistance strategy. And you can see that we've come off this resistance, but I've got a long bias and I think we're actually going to break through this resistance level and go up to these levels up here. So I'd be looking at entering a long right here at around 40,300, and my stop loss to mitigate the downside, I would put it in around about this level here. The reason I say that is because if you go back you can see this price level has been a resistance level for, you know, a good few weeks, right? Down here, this level here as well is resistance, and then over here it was resistance as well, and then over here is resistance as well. So I would suggest that if we are entering a new bullish phase, this would be the area where it would bounce. And so I want to give my stop loss a little bit of room, but if it goes down through this stop loss, then essentially I'm wrong, and it's going to potentially, you know, go down to this secondary support line. So I would put a stop loss in around, call it 39,200, with an entry at 43.99. So we're going to put this in here. You can get this calculator on, you know, just Google it, crypto position size calculator. I'll try and leave the link in the description. But let's say the open price, to make things easy, let's just say 40,000, and the stop price, let's say 39,500, something like that. And then the account balance, you've got 10,000 on account, and you only want to risk 2% per position. So let me make this bigger for you. So open price 40, stop price 39,500, 10,000 balance, and you want to risk 2% of that. If you calculate this, you can see that you can go in a position size of 0.4 Bitcoin. So this tells you how big your position can be whilst only risking 2%. Now, if your stop loss price was lower, let's call it 38,000, calculate, you can see the position size goes down because the potential loss is obviously a lot lower, right? So to keep it at a 2% risk of the portfolio at losing, you obviously have to make your position smaller. So hopefully that makes sense. Now I know, let's say I want to do this at 39,000, calculate. I know that I can go ahead and trade right here, trade at this level, and basically come and enter, you know, 0.2 or whatever it told me it was. And then even if my trade goes in, you know, against me and I get stopped out down here, I will only lose 2%. You can, you know, potentially go again per trade, you know, with that strategy. If you need to know way more about technical analysis, how to read charts and everything like that, I've got some other helpful videos for beginners. I've also got an entire crypto course, trading groups as well, private groups. You can come and ask me questions as well. So check that out if you need more help. If you want to sign up for KuCoin, you don't have an account, I'll leave that link in the description as well. I'm James with Money's EG. Cheers for watching, and I'll see you in the next one.